Welcome to this meeting of the Audit and Accounts Committee. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and to use social media during the meeting. Please make sure, though, that your phone is switched off or switched to silent. This meeting is being live streamed and a recording will be available to watch later on the County Council's website. There is no fire alarm scheduled for today, so if the alarm sounds, I'll adjourn the meeting and we'll leave by the side doors to my left and use the external staircase to assemble in the car park. Agenda item 1 is change to committee membership. And item 1 is a notification of a change to the committee membership. Councillor Adam Bostanci was appointed to the committee on the 6th of July 2026 and succeeds Councillor Rory Clark. I'd like to thank Councillor Clark for his short time as a member of this committee and like to welcome Councillor Bostanci to our ranks. Item 2 is apologies for absence and declarations of interest. Would Democratic Services please report any apologies?
None received, Chair.
Thank you very much indeed. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? I see no hands raised. If anything occurs to any member during the course of the meeting where they think they may need to make a declaration, please do so with the minimum amount of delay. Thank you very much. Agenda item 3 is the minutes of the meeting which took place on the 22nd of May 2026, together with the minutes action log. Let's start with the minutes of the meeting. The committee is asked to approve the minutes as an accurate record. Are there any objections or corrections? None. May I have someone to propose the minutes then, please? Thank you very much indeed, Councillor Wilson. Seconded. Oh, Councillor Fane. Thank you very much indeed. Move on to the minutes action log. Do members have any questions or comments on the minutes action log, please? Ricky.
Thank you, Chair. I'm prepared to support the minutes, but what I want to do is distinguish between the an action being administratively closed and the underlying issue being properly scrutinised. So the internal audit review of the shareholding monitoring of this land has apparently been treated as complete because members were emailed this link. Yet the audit gave only moderate assurance and raised 4 recommendations. Circulating that report is not the same as formally testing the findings, questioning management and monitoring implementation. So obviously the same concern applies to the local government reorganisation. We have no clear date for this committee to examine the controls over joint arrangements, shadow authorities, financial disaggregation, information systems, and the decision-making during transition. So I ask, obviously, for 2 more actions, if possible, to be recorded. The first one will be a formal audit and accounts item on this land's internal audit recommendations, and second, a dated report on LGR financial and governance controls before any material transitional decisions are taken, if possible. Thank you.
Right. I think you might be hanging your hat a little bit on this particular item. And with respect, may I ask if those items can be considered after the meeting or outside the meeting? I understand what you're saying and what you're asking for. I just will need to consult with officers about that.
Yes, that's fine, Chair, because obviously I won't oppose otherwise accurate records. It's just that I ask that my concern be minuted if possible. Thank you.
And I would emphasise again, and it is so important, moderate assurance is not a bad thing. It's not a failure or a partial failure. It's a technical term which is used within the risk assurance industry to describe something which maybe in lay terms we might describe as good, adequate, sufficient. Is the right word.
Thank you, Chair. I appreciate that. The only concern I have is that emailing the report doesn't discharge, obviously, this committee's scrutiny responsibility. That's all. Thank you.
Thank you. Right. Any other comments about the minutes action log? Then we'll take the minutes action log as being noted. Thank you very much indeed. Item 4 is petitions and public questions. 1 question has been received this month, which relates to the next item on the agenda, so we'll hear it then, very shortly. Item 5 is the Cambridgeshire County Council's draft statement of accounts for 2025-26, and this report will be introduced by Stephen Howarth, who's the head of finance. Stephen.
Thank you, Chair, and good afternoon, committee. So this report presents the draft statement of accounts for the council for 2025-26, representing the consolidation of the financial position of the whole council, including its in-year spending income, assets and liabilities, and our reserves. Publication is a major milestone for the council each year and a huge undertaking for the finance service and for a great many colleagues across the whole organisation. And I'm pleased to say that they were published on time again at the end of June this year. And encouragingly, this year that was alongside 83% of other councils. Ultimately, the accounts are there to demonstrate stewardship of public money and financial performance during the year in a way that is common to other local authorities and to an extent with other large organisations. And the whole statement of accounts includes pension fund accounts as well, which are reviewed by pension fund committee as well, and the annual governance statement, which is a separate item on today's agenda. So I'll just introduce the main council statement of accounts here, really. So the accounts at 186 pages are they're lengthy and complex, but they do follow a strict statutory approach of producing key financial statements in line with international financial reporting standards, and then further statements and notes that deal with adaptations to the international standards made for local authorities by the CIPFA Accounting Code. The production of the accounts this year has been relatively smooth, if still complex, but helpfully there has been no significant change in approach required by IFRS or CIPFA code changes, and no new major areas of accounting judgment required either. So the statement of accounts can be broken down into four main elements. So firstly, the narrative, report and forward sections at the start give an overview of the council's activities for the year and a summary of the financial position. That section provides, or is intended to provide, a bit of a bridge between the management accounts, which are produced internally and reviewed by other committees, and the statutory financial statements. It also confirms sort of an overall sort of more tangible financial performance for the council last year as being a £0.5 million revenue overspend and a £27 million capital underspend. Then we get to the four core statements: the comprehensive income and expenditure statement, the balance sheet, and the cash flow statement. Those three are prepared on a comparable basis through international standards, and then the movement in reserve statement, which is specific to local authorities. Then we get to the notes to the accounts. So they're responsible for most of the document's length, and they provide significant additional and helpful, I think, statutory disclosure of information, either in the form of further breakdowns of information, reconciliations of things like asset valuations and reserves, and additional disclosures of things like officer remuneration. And then finally, we get to the group accounts, which consolidate the accounts of the council and this land limited into the same main statements and relate disclosure notes. The paper and the accounts, Chair, themselves, I think, explain the core statements and disclosure notes fairly well, so I won't go into a huge amount of detail on them here, other than to draw attention, I think, to a few key matters. So firstly, on the balance sheet, which is probably the most useful core statement, I think, before you in the accounts, that shows an increase in net assets of the council of nearly £200 million to 1.54 billion. That increase is driven mainly by property asset valuation changes or increases, reflecting quite a strong asset base underpinning our activities. The statement shows that the net assets are backed up by £272 million of usable reserves, themselves broken into revenue and capital reserves, and about £1.3 billion of unusable reserves. And that includes items like the capital adjustment account, the revaluation reserve, the pensions reserve, which balance off accounting movements over the longer term. But that also includes, in unusable reserves, the dedicated schools grant deficit, which stands at nearly around £96 million for the year. So that DSG deficit can be seen in detail in note 18 to the accounts, which is page 63, and you can see it sitting in the unusable reserves in note 22 on page 73 as well. So that's still one of our, if not our largest financial risk, and is a major drain on our cash position as well. But just to emphasize, for accounting purposes, it's not considered a deficit in usable reserves still. Under a statutory override to the CIPFA code, which runs through until March 2028, it sits in unusable reserves. We are, as the report sets out, hopefully anticipating additional grant funding at some point for the majority of that deficit, as it has accrued up to the end of 25-26. Hopefully this year, as I say, but without national funding changes or national changes to the system, that deficit, I imagine, will continue to accrue in some form after this year. And then finally, the report highlights to members that in preparing these accounts, officers have had to undertake what's called an expected credit loss assessment on the long-term debtor with this land. It's a technical accounting exercise that looks at a range of possible default scenarios for the debtor, and in this case, just for the year ahead, and uses a weighted average basis of those scenarios to give an accounting estimate of what credit loss risk there is. And if that is material, we are required to make an adjustment to the accounts. But as the report sets out in this case, the assessment did not flag a material risk, and so no adjustment is made in the accounts. These accounts are subject to audit by KPMG. Now, the plan for which committee discussed at its last meeting. We expect the main audit work to start in sort of the late summer into September, but work to provide early deliverables on that is already taking place. And just to reiterate to committee that these accounts still will not get a fully clean, unmodified audit opinion due to national issues with local government audit sector that resulted here in a lack of audit for 22-23, the knock-on implications of which are still ongoing. And so just to wrap up, finally, we've engaged with KPMG on their building back assurance risk assessment work, which we've discussed at committee previously. And I think we expect to bring an update on that now to the next committee meeting. And particularly that should flag implications on what that work will have on the likely opinion to these accounts that are before you today, Chair. But I will leave the introduction there. Thank you.
Well, thank you very much indeed, Stephen, for a very helpful and concise summary of an extremely lengthy and complicated document. It was extremely helpful. Thank you. Before we move to open up the subject for question and debate from the committee, I'd like to invite Mr. Andrew Rosen to ask the question that he has raised on this subject. Andrew.
Thank you, Chair. In March 2025, the County Council and this land signed an amendment and restatement agreement in which they agreed to split this land's outstanding loan debt into two. 60.1 million was rescheduled with a higher interest rate, at least initially. The other 59.85 million was converted to an interest-free loan up to March 2029, with no obligation to repay. The conversion gave rise to a notional fair value gain of 11.85 million, which is reflected in this land's accounts, being the benefit to this land for not having to pay the loan interest. There is a conflict between the two interpretations of the same agreement. This land's consolidated accounts retain the entire 120 million loan liability, but recognise the fair value gain. But this Land Finance Limited's accounts, part of the same group, record an impairment of £71.9 million, being the sum of the interest-free loan and the fair value gain. In the Council's single entity accounts, 59.85 million is taken off the Council's debtors balance and debited to the income and expenditure account as a charge. The Council now recognises that that loan will not be recovered, and KPMG correctly describes it as an impairment. So can the Council please explain why it describes the arrangement as a £59.85 million capital contribution or capital grant when it is neither, and why this land recognises an £11.75 million capital contribution, but with an impairment of 71.9 million in this Land's Finance Limited's accounts. I also wish to know why the minimum revenue provision is spread over 43 years, when the prudent action would be to reflect the impairment in full last year. Thank you.
Thank you very much indeed for your question, Mr. Rosen. There are two significant parts to this question, so I'll take them separately. First of all, on the main item, under the restated loan agreement, £59.85 million of loan funding was converted into a performance-related grant that is only repayable if certain conditions are met. Because a potential repayment obligation still exists, this land is required to continue recognising the liability in its accounts. The company has had to recognise a fair value gain of 11.85 million in its accounts due to changes in the measurement of the liability caused by alterations to loan payment dates. It refers to this as a capital contribution in its accounts. The Council's accounting treatment considers the value of the asset it holds. Taking a prudent view, the Council concluded that the 59.85 million should be fully impaired because recovery is uncertain. This accounting impairment does not legally remove the obligation or write off the amount. As a result, the Council and this land can legitimately show different accounting treatments for the same arrangement under accounting standards. And the second part about MRP, although the impairment was recognised in full in 2024-25 in the accounts, capital finance regulations allow councils to spread the resulting minimum revenue provision charge over a number of years, provided the approach is prudent. The 43-year period reflects the average remaining life of the land and buildings that were originally financed by the loan, and this is consistent with the Council's MRP policy and ensures that repayment costs are spread over the period during which those assets provide benefit, rather than being charged in full in a single year. Thank you very much indeed, Mr. Rowson, for asking your question. I now open the, Mr. Howarth, would you be kind enough to come forward, please? I'm sure there will be questions. I'm now opening the agenda item up for questions or comments from members. Graham first, Peter next.
I'm afraid I didn't really understand much of the answer that you gave to Mr. Rowson. I'm sure it was technically absolutely correct, but my little brain can't fathom it. Can I ask, is KPMG comfortable with the result that you have provided? And so that's one question. And the second question is, on page 21, I think it is, of the original report, it indicated that the external auditor may be able to sign off the audit. I think, Stephen, you said that it will definitely not be able to this year. So I just want to be clear when we will understand a bit more about when we will get a clearer view about the accounts. Thank you.
Thank you very much indeed. Harry, would you be kind enough to answer those two questions?
So firstly, we don't audit this land, so I can't comment on their accounts specifically. But in terms of the council, we have not yet audited. Oh, yes, sorry. Is that better? There we go. So to repeat that, so we do not audit this land's accounts. As a result, I can't comment on their accounting treatment. But from a council's perspective, as of the audit year being 24-25 previously, we're happy with how the balance was recorded in those accounts. Obviously, the current year is still subject to audit, but based on risk assessment procedures to date, we don't currently believe there's a material issue there. Obviously, work is still pending. We concur that we don't think that if the council is of the view, and we agree with this, that the receipt of cash is doubtful, they should not be recognising an asset there because the cash receipt is not certain. Therefore, no asset should be recognised. In terms of bill back, we have now done most of our risk assessment work over this. We hope to move to a qualified opinion this year. So we have been a disclaimed opinion for the last 3 years now to KPMG, one prior to KPMG being auditors. A qualified opinion will give assurance over certain areas of the I&E notes and balance sheet, but there will be still certain areas, in this case, a number of the reserves and also your PPE balance, that we think will take a longer time to build back assurance for.
Thank you very much. Graham, would you care to follow up on either question?
I'm happy with the answer to the first question. I can understand that you're not the auditor for this land, and but what this county council has done is perfectly reasonable and in accordance with standard practice. So that's satisfied me. So there are a couple of items still remaining, like PPE, like reserves, where further work has to be done in subsequent years. So taking account of LGR, how many years are we looking at before we might get an answer to whether or not these accounts are adequate or not?
So we have, as of I think it was yesterday, we sent our reporting to Michael and Tom on where we think the bill back will get to. This is still under discussion, and it'll be sent to the November committee. Currently, we are aiming to give a clean opinion for the year ended March 31st, 2028.
I see Stephen is writing this down as well. So March 2028 is the for the accounts that finish March 2028. We will then have a clearer view as to whether or not the accounts are follow the standard practice or not.
That will be the first year of a clean
Thank you.
opinion. The qualified opinion will still give some assurance, but it will not be a clean opinion. No.
Thank you very much. Graham, do you want to follow up a bit further?
Sorry, I'm just slightly confused. We will or we won't know by March 2028. I realise I'm pushing you
Yes,
here,
that's
Harry,
fine.
but
So based on all the assessment procedures we've performed to date, we are of the view that by 2028, we will be able to provide you a clean opinion. That is dependent on delivery, of course, but there is no reason at this time we think that cannot be achieved.
Thank you very much for those answers, and thank you for the questions, Graham. Peter.
Thank you, Chair. I wanted to take us back to what Mr. Harth said about the DSG, and I think the 96.3 million quoted is well over 50% increase over the last year from by 33.4 million from the previous year. And it's referred to as still being a long-term financial risk to the council. Now, I appreciate this is a moving picture because it depends on action by others, requires government intervention. And at 275, you say that further announcements are expected. I don't know what date that was made. And of course, there have been significant announcements quite recently. But I wondered if there's any further progress and whether it would still be regarded as a long-term financial risk to the council.
Stephen.
So I think as between publishing the report and today, I'm not sure there's much change really. So yes, I think it's fair to say it's still a long-term risk to the council. In an accounting sense, it is still held as an unusable reserve through until the end of March 2028. Announcements that have been made by government to date have indicated they are intending to provide up to 90% of funding for the deficits that accrued up to the end of 25-26. Obviously, the definition of 90% is still, I think, a matter of we're waiting to hear that confirmed by government. And the timing of any grant payment, I think, is still very much up in the air from government as well. The drivers of that deficit position, the amount of spend on high needs block expenditure versus the grant funding that we get in that have caused that deficit to accrue, should change somewhat. We've submitted an SEND recovery plan to government, but ultimately this is driven by a difference between the level of expenditure we're required to make under statute versus the funding that we get. So unless there is, I think, frankly, a change in the national statutory position on this deficit will continue to accrue in some form, perhaps not to the same degree, or perhaps greater. I don't know really. But the deficit will continue to accrue in some form through to any point at which government changes the overall national picture or otherwise. And at worst, if the statutory override is not changed from the 1st of April 2028, we will have a proper revenue deficit that will, I imagine, in most authorities' cases, exceed their usable reserves at that point. So it's still very much a long-term risk, I would say.
Thank you, Stephen. Peter? Fine. Any other questions or comments from members? Yes, Adam.
Thank you, Chair. And I've sort of asked this before, I think, of Michael. On page 44, under place and sustainability, I understand that the council's solar investments are underperforming against expectations, but I also understand that they're making a healthy contribution to the council's income. So going forward, will there be opportunities to correct the income expectations that we have of these investments, or will they be reported as generating lower than expected income forevermore?
Stephen.
I think versus the original business case, they will probably be seen to have underperformed. One of the main drivers of the underperformance is the cost, their capital assets, the construction of which were funded by borrowing, and at the point at which the construction was taking place and the borrowing was taken out, the cost of debt skyrocketed, frankly, versus the original business case timing. Obviously, through the budgeting process, we would over time try to align income expectations with the income budget as well. So hopefully the two should marry off. Certainly now that most of the assets are operational and sort of on a sort of year-to-year long-term basis, and the income should be relatively clear. So hopefully the budgets will align with income expectations.
Thank you, Adam.
Come back briefly for clarity. So this is not the same issue as them coming on stream later than expected. This is actually caused by higher costs in the loans or something of that sort.
The delays in some of them coming on stream will have caused temporarily lower income than expected, but at the point at which they come on stream, that shouldn't be an issue. There will have been other factors other than the debt situation. So in some cases there might be lower than expected income, but broadly speaking, I would say this has been driven by the cost of borrowing.
Thank you, Stephen. Right, thank you. Mohammed.
Hi, I just had a question on the this land expected credit losses. So I can see there's a 0.7 million charge calculated, which was immaterial and not adjusted. I just wanted to understand that against the sort of 11 million reserve that we hold. So is the view that that's a longer term provision and the expected credit loss is just the next 12 months, and therefore that's kind of a separate calculation? I just wanted to make sure there wasn't anything that should be feeding into that ECL if we do hold a separate 11 million reserve against it.
Thank you, Stephen.
The this land reserve that is held that is referred to is about, I think, really providing for mitigating the risk of a actual crystallized financial cost to the council, whereas the expected credit loss is an accounting estimate. In this case, we are only required to do we think we're only required to do a 12-month estimate of that as well, because there's been no significant change in the risk on it in the financial year in question. So if we're not required to make an adjustment to the accounts because the ECL is not material, then I think we would not do it, because we don't want to draw from the council's reserves unnecessarily, and we'd hold them for any actual crystallized issue.
Okay.
Thank you, Mohammed.
No, that makes sense. I just had one other separate observation. So no issue with the disclosure in there. This was just around sort of the short-term borrowing, where there was a reference to the fact that we do a lot of significant short-term borrowing with the view that base rates are quite high, and therefore we take on sort of the refinancing risk. I could probably understand that maybe sort of 12 months ago. It's just a question of do we really expect base rates to continue to drop in the next sort of 12 to 18 months, and should we be reconsidering this given market expectations are more flat to moving to higher? Just wanted to get your sense on that, really.
Stephen.
I think that's an absolutely valid point and reflects our own thinking internally as well. I think so. This strategy of shifting more towards the shorter term borrowing versus longer term. I mean, the council has a lot of longer term borrowing. We've took out at very favourable rates for very long periods, but we have anticipated for a while now that rates would start to come down, and every time you think that's happening, something else happens internationally. So we are exploring now, working with our external treasury management advisor, pushing out some of our borrowing to the more medium term, sort of into the 2 to 5 year market, and looking at the approach to repaying that as well. So the PWO, the Public Works Loan Board, allows different ways of spreading the principal repayment as well that we're looking at as well. So I think hope when we bring the equivalent back next year, we might see a slight shift the other way maybe.
Great. That makes sense. Just a final point, in Appendix 1, there was a couple of actions in there which were partially was noted as partial, but no actual dates in terms of when they were going to be completing by.
Stephen.
I think it's our hope and intention that we'll should have these ticked off as we produce the 2026-27 accounts. So we've worked through a number of process improvements that have addressed the majority, I think, of these actions, and some of them just take a little bit more time to be actioned or to bed in.
Perfect.
Thank you, Mohammed.
That's it. Thank you.
Thank you very much indeed. Ricky.
Thank you, Chair. Coming back to the £11.3 million risk reserve regarding that's offset against this land's credit risk. I know we received an answer there, but what objective conditions have to be met before any part of that can be used for another purpose? Thank you.
Stephen.
So I suppose there's two aspects to changing the purpose of that reserve. Firstly is that it would be subject to a decision by committee or by council, and then it would be subject to the Section 151 officer's sort of judgment about the adequacy of the council's reserves. So really that's what it boils down to. So at the moment, I think it would be fair to say that the risk around this land is such that that reserve level remains prudent, certainly in the medium term.
Ricky.
I don't really think I have a follow-up, really. I mean, I think it's sort of a subjective opinion. There's no actual conditions actually we've noted or trajectory that we foresee happening in order for that to be able to take place. Is that correct?
Well, there's not a direct trigger link to that reserve, but we are required to hold reserves that meet sort of risks that are present, and this is one of a number of risks that are provided for in our reserves, either fully or partially.
Thank you. That's prudent. Thank you.
Any other member? Nope. From my point of view, the last time there was a significant change in the structure of accounts for local authorities was when the narrative report was brought in. And that was called a simplification, but in fact it made things complicated because the auditors then have to check the narrative report to make sure it's consistent with the main body of the report. And there is quite a lot of work which goes into producing the narrative report. I'm pleased that we have only got 17 pages of the narrative report. And the narrative report is meant to be a simplified summary of the accounts that anyone can read to see where we are and what the accounts mean. My request is that officers consider if that 17-page report could be made even shorter than 17 pages, just so that it becomes more accessible to the man and woman in the street. Thank you. Stephen, if you want to comment on that.
I suppose no more than to say, Chair, we've tried to take specifically your feedback on the narrative report in mind in constructing it over the last few years, and any feedback like that is welcome. One thing I would observe is that the accounts do lurch from the narrative report straight into very complicated core statements. And one thing we have discussed and some authorities do is they do simplified versions of some of the statements as well, but that would add pages to it, I think, rather than subtract. But yes, the intention is to try and make it slightly more accessible. I appreciate.
Thank you. Michael.
Just one thing to add, Chair. The SIPFA are presently looking at this, and we expect to have a view in the next 6 months in terms of whether there'll be any proposed changes that will be put forward to LASAG. So we'll watch this space.
We will indeed watch this space with great interest. Will the simplification be simplified further? And does that mean it becomes more complicated or less?
Chair, I'm smiling at this point because I was on the local authority statement of accounts group when this got simplified, and that was my aim, and it's also one of the reasons I resigned from that said committee. So I'll wait and see.
Fair enough. Thank you very much indeed. We look forward to it with interest. Right. If there are no further questions or comments, the committee is asked to review the Council's draft statement of accounts for 25-26, which we have done at Annex A. So thank you very much indeed, and thank you, Stephen, for your assistance. Item 6 is KPMG's external audit plan for the Cambridgeshire Pension Fund for 2025-26. We're joined for this item by Fiona Coates and Amala Jose, who are pension service finance managers, and Harry Fosco is still here from the external auditor, KPMG. I wonder if officers would care to introduce this report.
Thank you, Chair. This is very much auditor's paper, but we have taken few headlines to our covering report. It's a report. Sorry. It's a report we have seen before as officers, and it's not very different in risk, materiality, and how it sets out. The key risks are kind of expected. The management of override of control is the key risk. So this focuses on things such as the correct people producing the journal and correct people signing off before it's posted to the accounts. So we can prove that we are fully compliant here, and we certainly haven't had any issues in previous years. And the next key risk is the valuation of Cambridge Counties Bank. We get a separate valuation to address this issue. So we are comfortable that our existing control cover it. And coming over to materiality for for this financial year, materiality for the financial statement is 49 million pounds, which represent 1% of the fund. And the material misstatement threshold is 2.4 million pounds. So those are clearly big numbers, but we are dealing with a very big fund here. And coming over to the fees on 3.6 and on page 222 of the meeting pack, there's a bit information on audit fees, which are clearly sets out by the public sector audit appointments and agreed by the local authority. And members may also notice there are references to the IAS and ISAs. So IAS or International Accounting Standards are the accounting rules that governs how we prepare and present pension fund accounts. ISA or International Standards on Auditing are the standards that KPMG must follow when carrying out an audit. In simple terms, IAS is a rule book for preparing accounts, and ISA is a rule book for auditing them. Finally, regarding the timeline, audit is already underway as of this July, and audit findings report is expected in November, and final sign-off is planned in January 2027. Any significant adjustment will be reported back to the committee through the audit findings report. Yeah, officers are satisfied with the audit plan, and yeah, fund controls processes are operating effectively. Yeah, with that, yeah, we are happy with that, and I can pass over to Harry from KPMG.
Indeed, in just 1 second. Thank you very much
Thank you.
indeed for that introduction. Mention was made there of the valuation for the Cambridge and Counties Bank. Members received last week, I believe it was, or it might have been earlier this week, a confidential paper going into some detail about that. I just ask members not to mention anything which was in that confidential paper in open forum in this meeting, please. If you're desperate to mention it, we would need to go into confidential session. Harry.
Thank you. We were not intending to present this paper in full because it's already been through the pension committee. I think the summary given there was quite comprehensive. As an apology, the pension manager wasn't unable to make this committee, so if there are any specific questions on our report, I might have to defer that to when they return. If there are general questions, I can attempt to answer them, but I may ask to delay. Thank you.
Thank you very much indeed. We will move to questions or comments. Do any members have any questions or comments to make? Remembering that we are here talking about the audit and the audit plan rather than the underlying fund. No questions. It was a very comprehensive report. Thank you very much indeed. Since there are no questions, we're being asked to note the audit plan for 2025-26 for the Cambridge Pension Fund and the presentation which has been made by KPMG. No vote is required on this. Thank you very much indeed, members. Well done, Harry, and you've got off lightly on that one. Excellent. Good. Item 7 is the annual risk report for 2025-26. And this report contains an appendix which is exempt from publication. If any members want to discuss that exempt appendix, would you indicate that now, please? That is the appendix on cybersecurity. Good. That means we can stay in public session. We can continue with this, and this report will be introduced by Mairead Claydon, who is the Head of Internal Audit and Risk Management. Mairead.
Thank you, Chair. This paper represents our annual update to the Committee on Risk Management activity throughout the year. The same report also went to Strategy Resources and Performance Committee at the start of July. Just to note that you'll see at section 3.3 of the cover report that during the presentation of the risk strategy to SRPC at the start of July, it was agreed that we would make some further amendments to the strategy document and that would be re-presented to SRPC in October. In particular, it was agreed to amend the strategy to provide greater detail on the approach to risk appetite, which was introduced in 2025, and particularly the risk appetite statements and the split between optimal and tolerable risk. So the strategy you see before you has yet to have those amendments applied, and the intention would be that those amendments will be made and presented to Strategy Resources and Performance Committee in October, and they will then come back to this committee's next meeting, which I believe is in November. You will find the full annual risk report at Appendix 1. This gives an update on the implementation of actions within our existing risk strategy, as well as the outcomes of our annual risk assurance review, which is the process we use to identify new actions for our annual refresh of our strategy. The current draft new strategy is at Annex B. This refresh is just covering 2026 to 2028, bearing in mind the expectation that new authorities will be in place from 1st of April 2028 under LGR. The outcomes of our annual risk assurance review has led to some updates to the Council's risk management policy, which is presented annually to both this committee and Strategy Resources and Performance. So just to note, firstly, we are proposing that we will introduce risk categorization. You'll find some more detail on this in the annual report at section 4.3. The aim of this is to be able to group risks by their risk themes. So for instance, financial type risks or safeguarding type risks will be badged as such on the risk system. And this then allows us to look across the entire organisation at how directorate risks and corporate risks align to those overall risk themes across the council, and allows us to make links between different risks based on the nature of the risk itself. This is something that's recommended as good practice, and we are currently proposing that for our categories, we will use the categories of risk that were agreed by CLT in 2025 for the purpose of setting risk appetite. So you can see those categories at section 4.7. And then at section 4.8, our corporate risk manager has produced some charts which give insight on the current balance of those risk categories across the corporate risk register and gives a sense of how we can start to use this information to give us different insights into how the council is managing risks across different themes. We have also amended the approach to scoring financial risk impact. This is set out at section 4.12 of the annual report. The thresholds for financial risk had not been increased in many years. Benchmarking suggested they were on the lower side for comparable authorities, with any impact over 10 million previously scored as very high. And additionally, the scoring didn't distinguish between capital or revenue expenditure, which a number of other councils do. So we have proposed making some amendments to how financial risk is scored. We are asking that the committee note and comment on the annual risk management report and corporate risk register, which you'll find in full at Annex A, and then endorse the risk strategy and the updated risk management policy, bearing in mind that you will see the strategy again fairly shortly. Very happy to take any questions. Thank you.
Thank you very much indeed, Mairead. And members, we had a very lively debate on this when it came before Strategy, Resources and Performance. And Mairead, you'd be delighted to hear. I won't say again all the things I said then because I think they've all been taken on board. Ricky first.
Thank you, Chair. I'm a bit confused because obviously this committee is being asked to endorse a risk strategy that the SRMP committee has already required officers to amend and return in October. So why are we being asked to endorse this risk strategy now? Well, that's my first question. I'll let the answer.
Mairead?
Thank you. The approach that we take with the risk management is that as both Strategy Resources and Performance and Audit and Accounts Committee have different but complementary responsibilities in respect of risk management, we ensure that the papers go to both committees simultaneously. So occasionally that can result in things becoming a little out of step, as in this instance. But the intention is that both committees receive the full information and have the same level of oversight as the other committee.
And from having spoken quite a lot at the Strategy, Resources and Performance Committee meeting on this subject, I can say that we agreed unanimously to endorse the report as it was in front of us, although recognising it was subject to further amendments and alterations and in my opinion, improvements, which will come forward in the next few months. So that's the rationale behind why it's before us now.
Can I then ask, will then every amendment then subsequently be returned to this committee rather than approved without the oversight? Thank you.
That's a good point. Mairead.
Thank you. So just as the original intent was that we would seek for the strategy to be endorsed by both committees in its first drafting, the same applies to the second drafting. So we'll take that back to SRPC and then it will also come back to this committee. Yeah.
Thank you, Chair. To deal with Ricky's first point, I'm going to assume that it may be helpful to SRP for us to investigate some of the points in here, which, but I have to say that I haven't read the minutes of the SRP meeting, so I may risk covering things that have already been satisfactorily covered elsewhere. I was going to turn to the risk register itself. Is it Appendix A or Annex A? And being simple, I like to focus on, I always find RAG ratings, if that is the right term, appealing. And it seems sensible to focus on those risks where the likelihood is what's referred to as category 5. And by and large, the risks are in category 3, except for, I think, 2. One is in category 4. But there's a particular one, risk 4, should a serious incident occur. And there are then 11 triggers listed, which are quite different in nature. And so I wondered what sort of a serious incident might occur which would trigger this particular risk.
Thank you. Very good question. One which almost exactly I asked myself at Strategy, Resources and Performance. Mairead, do you want to answer that question? Or Chief Executive, either one?
Happy to pick
Mairead,
that up.
okay.
Thank you. So the intention is that this risk covers any kind of serious incident which would require a major business continuity or emergency planning response from the council. So that could be anything from, say, a major IT outage that affects multiple council systems. It could be flooding locally, potentially, really any kind of incident that you could imagine that would disrupt the council's ability to deliver its normal services and operations potentially would fall within the remit of risk 4. Although risk 4 is focused on those incidents which would require a very substantial and significant response from the council as a whole, whereas individual services will also have more detailed business continuity and emergency plans for their own services, which should be able to cope with sort of smaller, more localized incidents, if that makes sense.
And the quantification of the likelihood of that is difficult because it also includes the unexpected and the unanticipated. Chief Executive.
Thank you, Chair. Without wanting to equally replay the debate that we had at Strategy, Resources and Performance Committee, the review of the likelihood of this risk and the increase in the likelihood very much relates to the national change to the UK terrorism threat level applied by the Joint National Intelligence Committee and how that is then shared with us through appropriate channels. So the likelihood score has gone up as a direct consequence of that change. And as Councillor Bowden may recall, I also recognise that this authority in partnership with Fenland District Council was also in the process of continuing to deal with a prolonged major incident that is a cross-border matter with Norfolk. And as a consequence of having both a long-running matter and, dare I say, the increase in the national terrorism threat level, the likelihood therefore went up. Thank you.
Thank you very much indeed, Chief Executive. Peter.
If I may follow up on that. this might be going beyond the remit of an audit and accounts committee, but Mairead did mention flooding, and the chief executive has referred to a wider incident that is current. I was perhaps surprised that we haven't looked at the impact of climate change. You know, on my way here, I was listening to tales of a massive and uncontrollable fire on the outskirts of a major European capital. We've talked about flooding, and clearly these things, the risk of these things happening is increased. What I'm not quite sure about is to what extent they are matters for us. I mean, clearly fire is principally a matter for the Fire Authority, as Chief Executive pointed out to me in another context recently. But do they impact on us? And if so, should they be included amongst the triggers listed in the risk register?
Thank you. It's not so much whether they impact on us as whether they are relevant in the assessment of risk. And Mairead will be able to give us the answer to that.
Thank you. Certainly, it is relevant to the assessment of risk 4. I would, however, note that we do have risk 12, which is Cambridgeshire County Council is not adequately prepared for the impacts of the changing climate. And so I think some of those specific elements that are directly to do with climate change are captured within risk 12, perhaps rather than solely within risk 4.
Thank you. Peter.
It's very helpful. If I may, follow up on another one here. Risk 11, the failure of collaborative working, and in particular, the potential consequences of Cambridgeshire residents being unclear about which organisations to engage with. And I'm just wondering whether that risk is likely to be, I see a lot of references inevitably to LGR in this, but whether that risk is likely to be increased or reduced by LGR, and whether the current delay in a decision on the nature of LGR has any potential impact there, or whether that is a matter to be considered elsewhere.
Mairead, would you care to take that one?
Thank you. I think I should note that these papers relate to the risks as they were, I think, mid-June, and therefore that won't have been taken into account in the current drafting of the risk register that you see before you, but I would expect that would be taken into account for the next time that you see this risk register.
And Chief Executive.
Thank you, Chair. So in relation to the Vice Chair's question, just in addition to Mairead's comments, whilst I appreciate the specific question around local government reorganisation, I would actually make the point that the reforms to the National Health Service, which have already been applied, actually make that issue more challenging. And of course, as members will be aware, the Home Office is currently proceeding with significant proposed changes to the police service nationally as well. Again, that will make matters more complex, not less so. I guess my final comment in response to Councillor Thane's question would be the absence of a decision from government on local government reorganisation doesn't actually add complexity in the sense that nothing has changed as yet. But of course, as we move further forward on the assumption that will happen, then of course there are aspects of complexity that may get worse, and indeed collaborative working could become more challenging because of the nature of the decisions that LGR will impose upon the area. Thank you.
Thank you. Is that it, Peter?
I think so, Chair.
Well done. Thank you very much indeed. Mohammed.
Yeah, just a follow-up on risk 4, just taking it as an example, really. So as with the risk going up on this, does that drive any sort of additional resilience testing or reprioritization of those actions that you have underneath around what can we do to be better prepared with the risk increasing?
Thank you. Chief Executive first.
Thank you, Chair, and thank you, Mohammed, for the question. I think one of the things that we would say, whilst the likelihood has gone up, actually the County Council's response to such incidents has significantly improved over the last 18 months in terms of the regularity of training, the breadth and depth of officers who are formally trained to respond to major incidents, the fact the Council itself now has a standalone emergency planning team, which previously was shared with a neighbouring authority, which would have compromised our ability to deal with exactly the incident we've been dealing with recently. And then equally importantly, what it does do is it leads to regular refresh and reporting of things like the Council's own emergency management plan and business continuity plans. And I can reassure the committee that, in fact, at the corporate leadership team meeting on Monday of this week, the revised emergency management plan for the Council was brought forward, and that will be reviewed on at least an annual basis, with a regular report from the emergency planning team through to my corporate leadership team happening on a twice yearly basis, which also links very nicely, Chair, to the internal audit findings you will find in the internal audit progress report in respect of emergency planning later on the agenda. Thank you.
Thank you very much indeed. Mairead, do you want to add to that? Nope. Good. Thank you. Mohammed?
Yeah, I think we may cover it later, but so yeah, I wanted to check there's a control around IT disaster recovery arrangements in there, control 4, which is marked as reasonable. Is that updated against the recent audit report, or will that be something that needs to be amended?
I believe that would have been taken into account as of the timing of this report, yes.
Thank you.
Thank you. Any other comments or Vicky?
Thank you, Chair. I'd like to touch on directorate reporting if possible. So our policy requires directorate risk registers to reach the relevant committees at least every 6 months, if I'm not correct. But I'm happy to be corrected if I'm wrong, but I think finance and resources, place and sustainability, and the former strategy and partnerships directorate failed to do so during the periods that's been identified. So can I ask who was accountable for each of them failures, and why was that allowed to continue? Thank you.
All right.
Thank you. It's fair to say that the policy is for directorate risk registers to go to committees every 6 months. This is something that I think we are just starting to get that kind of corporate review of as part of our changes to risk management, and something that we're now reporting on up to CLT through the CLT risk and assurance meetings. So I would expect going forwards that we'll see much more regular reporting from those directorates.
Michael first, and then back to Vicky.
And Chair, if I can just clarify, the Finance and Resources Risk Register came here at the last committee.
Thank you. Vicky?
Thank you. If going forward, obviously that's being promised that it's going to happen going forward. Can we get any dated schedule deliver for sort of every directorate if possible, and can we record it as an action possible?
Right. Oh, sorry. Chief Executive first, please.
Chair, just to be clear, risk register reporting by directorates would form part of the forward agenda plan for the relevant service and policy committee, which would be held by democratic services. So what we can ensure is that that's programmed properly if those dates have not already been set. So we can pick that up through democratic services, because that's a matter of standardised reporting by directorates. Back to Councillor Ioannidis' earlier question, just to note that some directorates will be required to report to more than one service and policy committee, the best example of which is the Place and Sustainability Directorate, which will be required to report on relevant aspects to highways and transport, COSMIC, and probably strategy, resources and performance in respect of some elements as a minimum, and environment and green investment in case I forget anything. So yes, that's part of the complexity, because we do of course need to ensure that the relevant aspects are covered by the relevant policy and service committee. And then the final point to note in terms of the Strategy and Partnerships Directorate, as you'll see from my assurance report later on the agenda, of course that directorate ceased to exist on the 1st of January this year. Thank you.
Thank you, Chief Executive. And I have the comment that was made by Vicky, though, which I think is a really valid one. And Mairead did explain about it being a relatively new policy, which is being followed, is the non-conformance to this. And I wonder if from now on it's going to be possible for non-conformance to be flagged up to us. We don't need to know what has been done in accordance with the policy. It's when it hasn't been followed, I think, that we may have some interest. Mairead.
Thank you. Just to note that this is an action within the risk strategy. So when we bring reports back to this committee on the progress of the risk strategy, which we will do throughout the year, you will get that update on have we seen those reports going through at the directorate level as well.
Thank you very much. Any other comments or questions from members? Graham.
I have 2 questions, Chair. On the corporate risk register on page 255, There are none, as far as I could see, for category 7 for reputation. And reputation is something which we are extremely keen on to ensure that we do have an adequate reputation. Is that covered by a KPI separately then, so we don't need a separate risk for it? And secondly, this is probably something for Michael. Under category 4 financial, that it says the risk that the council does not have enough budget to deliver agreed short and medium term corporate objectives is still 12, and it used to be 20. I'm just looking ahead to next year's budget and thinking it's going to be quite difficult, or officers are telling me it's going to be quite difficult. So should we not be increasing that from 12 towards 20? Those might actually be issues that I should have raised at SR&P had I been there, but I wasn't, so I can't.
No problem at all. Let's first of all take the category 7, and I must admit, Graham, I didn't spot that when I read through this, so well done for spotting that. Would you explain, Mairead, please, about category 7?
Thank you. It's an excellent question, and it's something that we've had discussions about within the risk management team. So we felt that it was appropriate to use the pre-existing categories which provide guidance on risk tolerance levels, because that gives a consistent read throughout our risk management policies and procedures on how we group risks by theme. What we found when we analysed the risk register was that we're not really seeing any risks which are pure reputational risks, because naturally often a risk in another category will come with a reputational element. So it may be the case that there are many risks which perhaps their primary category is something like financial or legal and regulatory, but they have a reputational element to them. And I think there's some thinking and perhaps some further work for us within the team to do to consider how we badge risks that cut across some of these categories, and whether we can kind of assign multiple categories to some risks that would help us then badge perhaps risks which have a particular reputational element. So it's something I would say that is still under review and that we'll look to develop further as we work on the risk management strategy.
Thank you. And on the subject of the council's finances and the fact that the risk we've got onto category 4 has stayed at number 12, would you give an answer to that, please, as far as you're concerned from the risk calculation? And then I'll bring Michael in, if I may, to explain it from his side.
I apologise. I'm going to have to ask for that question again.
The category 4 financial risk that the council does not have enough budget to deliver agreed short and medium-term corporate objectives, that risk score has remained the same at 12, despite the additional risks that there may be next year, let alone to do with LGR. And I think Graham's question was, is it justified to maintain that at 12, or is the risk now one which should be higher? So from the risk scoring point of view, I'd be interested to hear what you say, and then come to the owner of the risk to ask him for his comments.
Thank you. I think I would say that risk scoring is primarily a matter for the risk owner to consider in consultation with CLT in terms of what they believe the most appropriate scoring is, and that my role is more to challenge and have those conversations around ensuring consistency of risk scoring, rather than to say that any particular score is or is not appropriate. So I would probably hand over to Michael to give his views on this one.
Thank you, Mairead. Michael.
Thank you, Chair, and thank you for the question, Councillor Wilson. I think from my perspective, there's three main aspects to this. There is the outturn flowing into the current financial year 26-27 position. Obviously, the outturn improved largely as a result of controls that we introduced and have retained into the 26-27 year. That is showing, whilst there is a small overspend forecast in 26-27 as we stand at the moment, that is far smaller than we have seen and is certainly manageable. It is a tenth of what was seen last year, and we managed that successfully. So I think there are strong controls in place and an ability to manage the 26-27 year. When I look at budget setting, clearly we are in a stage in the process. We will work with the administration just as we'll work with all parties to consider any alternatives that will come to the February Council following scrutiny in December and January, and public engagement as well through that. As it stands at the moment, that will inevitably be challenging because that is the world that we operate in local government. We do, though, now have differences to previous years, most notably a 3-year financial settlement that gives us greater certainty in terms of what we're trying to work with. So whilst decisions might be difficult to take, they are ones that we will work forward over the coming months, because as a local authority we have to set a balanced budget, and within that stick within certain parameters of council tax precepts. So we will have to work through that in the coming months, and there's nothing leads me to believe that we can't deliver that if I compare ourselves to peer authorities that are already in exceptional financial support situations where they've borrowed on a credit card and they're paying the credit card back and they're having to borrow next year. We're not in that situation. The third point I would flag is the dedicated schools grant. That remains, as Stephen House was articulating earlier, the largest risk that we have. We will know in September what our position is in terms of that up to 90% position. However, I remind members of previous comments I've made at Strategy, Resources and Performance Committee. At this stage, for the legacy debt up to the 31st of March 2026, we already have a significant provision in the reserve, which is around the 10% mark. So the issue would be anything going forward, but at this point, that's just conjecture. So we continually review this. I'm not saying that this will not change as it did during the course of last year, but as we sit here today, the facts and information that I have before me led me to conclude that 12 was still the right score.
Thank you. Graham.
I'm grateful for that explanation, Michael. I can understand that this financial year we're in a much better position than we were last year. The 3-year settlement is helpful, although we could always do with more money. I just feel that we're giving the wrong message to the national government in particular. If they were to look at this and say 12, oh, well, that means that Cambridgeshire is okay. And it's not really okay for next year. It may become okay, but it isn't currently okay. But that is a separate issue for you to consider at some stage, I think.
Michael?
Yeah, and absolutely, we continue to lobby, even though the position is set under what might be called a formula review rather than a fair funding settlement. And we are actively already engaged in the next comprehensive spending review in the formula position in relation to that. And of course, we also champion other aspects of that, including the funding for our schools, which has a direct impact on our special educational needs and disabilities position. So we are continuing both as a council, but also through networks like the County Council Network and the Society of County Treasurers, raising this and other points with government.
Thank you, Michael. I think it's worth saying, Graham, the purpose, as you're well aware, the purpose of the whole risk management process isn't what the public appearance is, or even worse, what the appearance is to government. It's to make sure that we internally understand what our risks are, that officers are able to manage it, and that we are able to have good oversight over it. I fully understand what you're saying about how it may appear to government, but that's not the primary purpose of what the risk management process is and the risk reporting. Do you want to say anything else, Graham? Any other? Lewis.
Thank you, Chair. Yes, and on that very same point. It's not working. Now it's working. Sorry. So yes, I think that the risk rate, we have to look very closely to that risk rate. But what I would like to refer also is to corporate risk 12, that states that Cambridgeshire County Council is not yet adequately prepared for the impacts of a changing climate. Now, given the current climate events, but the evidence, the best available evidence as well, and the impact that it may have on our services, can we explain when the residual risk was last fundamentally reviewed, and whether there is a case for increasing the risk rating? And in addition to that, should the council consider reducing the risk appetite in this area to reflect the likelihood of climate-related risks that will become more significant over, well, I wanted to say over the medium and long term, but I think now we must say over the short term as well. Thank you, Chair.
Thank you. Mairead, can you give an answer to that?
I think best for us to take those comments away and bring something back to the next meeting, if that's okay.
Thank you. Chief Executive.
Chair, to be helpful in response to Councillor Navarro's question, and recognising we will take the action away and come back, I'd just like to clarify that the risk in the risk register is directly related to the County Council's own operations and not to Cambridgeshire as a place. Some members may recall that previously the County Council had sought to address climate risk for the geography as well as for the organisation, and in all reality, subject to previous decision making by elected members and advice from officers to enable members to make that decision, it was absolutely right to focus that purely on the County Council's operations, because we cannot be responsible for mitigating climate risk for the whole of the county. In reality, that is an obligation on individual households and businesses and other public sector bodies and individual residents. So the risk in this risk register is purely about our own operations and our response to climate in that regard. I would also say that that risk aligns directly to the County Council's approved climate change and environment strategy, which is referenced. So we will take that back and come back with a fuller answer. But I just wanted to be really clear that there is no intention to broaden this council's response out to look at climate change responsibility for the place rather than for this organisation in its standalone sense. Thank you.
Thank you, Chief Executive. Lewis.
Thank you, Chair. And yeah, thank you, Chief Executive, because it is precisely on the operation of the council that I would like to emphasize my question. I made the same, similar question, very narrow in SRP regarding our provision to adult social care and the risk, the real risk that we are facing. You were there, Chris. So yeah, it's circumscribed precisely to our operation.
Thank you. Oh, Ricky, sorry.
That's okay, Chair. Thank you very much. I just want to move the focus quickly just to partnership risk. The partnership deep dive was marked as complete, but what I noted, and correct me if I'm wrong, all responding sample partnerships indicated they did not have risk registers. So which partnerships were sampled, and what public money and statutory services do they control, and is there any remedial action that now follows from that? Thank you.
All right.
Thank you. It's a good question. I can't, I'm afraid, tell you off the top of my head specifically which partnerships were sampled as part of that testing. However, what I can say is that following the findings of the deep dive, we are currently in the process of scoping what we're terming a risk assurance review. So that will be a focus on specifically the partnerships risk within the corporate risk register, taking a look at the controls that are currently in place, whether they are being implemented as we'd expect them to be, and then also looking at the action plan and the implementation of actions that have been marked as complete against that risk to provide a more broad assurance over how that's being managed.
Thank you. Ricky?
No, thank you. I appreciate that. But at present, how is the council then satisfying itself that the risks to its money, data, and obviously statutory duties are being managed before entering or continuing in those arrangements if we've got none of that risk data? Thank you.
Chief Executive.
Chair, whilst I appreciate Mairead will obviously come back and confirm the sample concerned. The County Council has a fully approved and documented set of partnership guidance that officers are required to follow. That sets out the governance arrangements for working in partnership. It sets out the key partnerships this council is a part of, including things like the Integrated Care Board. And actually, not all of our partnerships involve direct expenditure of County Council money. We are sometimes a partner in helping other organisations determine how to spend money, such as the NHS. And some of the partnerships literally have no data sharing requirements built into them because of the nature of what they involve. But I think it might be helpful if Mairead gives you both the information on the sample and perhaps, Chair, if it's useful, we can also circulate the approved partnership guidance that was put into effect. That also required services across the council to formally document and respond to their level of compliance in respect to that guidance. So it's something we've actually taken quite a number of steps to address over the last 18 months. Very happy to share a fuller briefing note with the committee following this meeting. Thank you.
That's very good of you, Chief Executive. I think that guidance note would be very interesting. I must admit I wasn't aware of the guidance note before, so I think I'd be very interested to read that. Ricky.
Thank you. I just want to clarify then, if we can get that, that's great. I just want to make sure, is that then tested against the council's own risk management standards? So that, if that makes sense.
Mairead?
Thank you. Yes, its internal guidance and the expectations around risk management were based on internal risk management policy and standards.
Right. We look forward to the further information. Thank you very much indeed. Any other comments or questions from anyone? Okay, I'll restrict myself to one comment, not repeating anything I said before in the previous meeting. Just when consideration is being given about risk appetite and how we are moving forwards, and we are on a path here of getting from where we were in the past, which was not really to have any great understanding of risk appetite at all, to a much more mature attitude as far as risk appetite is concerned. Risk appetite is the responsibility ultimately of the councillors. It's our responsibility to set risk appetite with the advice that we get from officers, of course. What I would just ask, and maybe I'm going 2 steps too far here, maybe we only should go 1 step at a time, but it is important that members are given the opportunity to have sufficient granularity when considering risk appetite. So having a risk appetite on a wide range of different services is one thing, but it may be that members decide at a certain point that one very specific item requires a different risk appetite from other ones which may be similar. So I would just ask the considerations given as to the opportunity for granularity of risk appetite, if that is what members decide at some future time in any particular respect. Thank you. Right, so we can move to the report recommendations. The committee is recommended to note and comment on the annual risk management report, which is in Appendix 1, and the corporate risk register in Annex A, and we have done so. And we're also being asked to endorse the risk strategy Annex B while noting the planned amendments set out in section 3.3 below, and to endorse the updated risk management policy in Annex C. Are members content to approve those recommendations? Yes? Looks like I don't need to move to a vote then if we're happy to agree those unanimously. Thank you. Agenda item 8 is the annual governance statement for 2025-26, which is introduced by Tom Crisp, corporate governance lawyer. Tom.
Thank you very much, Chair, and good afternoon to the committee. The report presents the Council's draft annual governance statement for the year 2025-26 for the committee's consideration before it is signed off and incorporated into the Council's statement of accounts. The Council is required by the Accounts and Audit Regulations 2015 in each financial year to review the effectiveness of its system of internal control and to prepare an annual governance statement. So the draft statement before the committee is the product of the review that has been undertaken in relation to the previous financial year. The statement is structured around the 7 core principles espoused in guidance issued by CIPFA and SOLIS, which serves to guide local authorities in the preparation of its annual governance statement. Actions arising from the review are reflected in the action plan set out at section 12 of the statement, And members will note that Section 11 provides an account of the progress made in delivering the actions identified in the statement from the previous year. The statement is brought to the committee to seek members' views as to whether the statement reflects their understanding of how the council systems and processes are working. So comments and suggestions from the committee will be very gratefully received. To the extent that any minor amendments are then required, a delegation authorising the Service Director, Legal and Governance to make any such changes in consultation with the Chair and Vice Chair is then also sought. Thank you very much.
Thank you very much indeed, Tom. Members, questions or comments? Well, it is such a well-produced report that everyone is satisfied, and I have to say it is comprehensive. But if no one has any questions or comments, the report recommendation is for us to, first of all, consider whether the draft annual governance statement, which we have in Appendix 1, is consistent with the committee's own perspective on internal control within the organisation and the definition of significant governance and control issues noted in paragraph 2.2 below. And secondly, to delegate authority to the Service Director, Legal and Governance, in consultation with the Chair and Vice Chair of the Audit and Accounts Committee, to make any subsequent minor amendments. Are members satisfied on recommendation A and content to approve the delegation in recommendation B? Graham?
Can I just prove that I have read this whole document? I don't think, unless I've missed it, Tom, there is a definition of who CLT comprises. It says what they are responsible for at the bottom of page 351 and of our pack and the beginning of 352, but it doesn't actually say, I don't think, who CLT are. So that would be helpful if that could be included.
Thank you, Graham. I think the Chief Executive would like to answer that one.
Chair's very simple answer. The corporate leadership team is formally defined in the Council's constitution, including the schedule of the management structure, identifying exactly which post holders sit within that environment. Thank you.
Thank you very much. That tells both of us.
Well, yeah, indeed, that tells both of us. Whether everybody is going to read all the other ancillary documents or not, I don't know, but that there is the availability of it, and most of us know who the CLT comprises, but it could be included. Thank you.
Thank you very much indeed. Chief Executive.
Chair, thank you to Councillor Wilson for the comments. I would just make the point that the corporate leadership team and officer structure of the Council is fully accessible on the Council's website, as of course is the entirety of the Constitution, including the detailed schedule that sets out the role of the corporate leadership team and the composing members. Thank you.
Thank you very much. And I think the point that Councillor Wilson was making is that it's just helpful when anyone is looking at that report, if maybe, at the very least, there could be a cross-reference to that, if not giving the same information again. I think that's the point that Councillor Wilson was making, and it wasn't a bad point, to be quite honest. So, given what I said before, are we satisfied with recommendation A and content to approve the delegation in recommendation B? All happy with that? Fine. If there's no objection, we'll take that as agreed unanimously. We won't need to go to a vote. And we can move on to the internal audit progress report, which is in agenda item 9. And this one will be introduced by Mairead Clayton again, our Head of Internal Audit and Risk Management. Mairead.
Thank you, Chair. This is our regular internal audit progress report, and it's providing an update on the work of the internal audit team to the 30th of June. A few key things to highlight. Section 3 sets out reports that have been issued at draft and final since our previous progress report, and Section 4 includes a summary of final reports issued where there has been a limited opinion given. There is an update on the audit plan for the next 4 quarters at Section 6, and Section 7 then provides the overview of the implementation of audit agreed actions. Currently, there are 65 actions outstanding, which is a reduction from the previous 87 actions outstanding. And Table 8 in Section 7.1 shows the actions implemented against the actions which have become overdue for each directorate, again, since the previous report. Just to note that Annex B, which gives the details of the individual overdue actions, was unfortunately circulated with track changes, for which I apologise. You should now have a clean version that shows the latest updates for all overdue actions. Section 9 gives an update on the whistleblowing referrals, which have been coming into the team via the corporate whistleblowing route. We have actually seen a slight drop compared to the same time last year, with 8 referrals to the end of June 2026 compared to 13 to the end of June 2025. And we're also seeing steady closures of existing cases. You will see there's a summary of the outcomes of all closed cases at section 9.2. And in a couple of cases, they did result in audit reports and recommendations, which are noted. And then lastly, section 10 gives an update on key financial systems. There are a few updates since the papers were published, which I will just quickly note. So both accounts payable and general ledger reports have now been finalised subsequent to the publication of the papers, with good opinions. And also just to note that we have agreed lead authority audit arrangements now for 2026 to 2027. And as expected, CCC will be picking up the accounts payable and the income processing audits for the full complement of lead authorities. Thank you very much. Happy to take any questions.
Thank you. I'll open it up to members. Any questions or comments? Ricky first.
Thank you, Chair. I have some comments to start. I mean, the reduction from 87 to 65 actions, I think, is positive. However, I think the age and importance of some of the remaining actions matter more than a headline count. What I see is a reoccurring pattern that we're agreeing actions, but we're missing some deadlines. Then we provide a new date and then eventually state that the risks have effectively been accepted. I think risk acceptance should be explicit, senior, documented and visible to members. I don't think it should be an accidental result of delay. So I did note some questions I had on this in regards to that. Sorry, I'm just going to have to find them because I'd written these down. Bear with me. So although the total outstanding actions fell, then the number more than 12 months overdue has increased from 15 to 21. So what explanations that deterioration, and has the largest number of high risk overdue actions increased also? Thank you.
Thank you. Right. When you're answering that, could you also just answer the point that was mentioned briefly by Ricky about dates of expected dates of resolution of these reports, of these investigations, and the fact that in some cases we get date after date after date after date, which doesn't really seem to be consistent with what I'd expect.
Thank you. So with the issue around risk acceptance, if a directorate wishes to accept a risk and not implement an action, there is a process for this which we follow, and that involves sign off from the executive director and typically also our Section 151 officer to confirm that they are comfortable with that level of risk. The statements from those officers are then also brought to this committee for scrutiny and challenge before a risk would be closed, an action, apologies, would be closed with the risk accepted. There is an issue as well in that if an action is very severely overdue, then potentially it could be argued that the organisation is sort of accepting the risk by default. The information which is in front of you in terms of Annex B, the updates that are provided by the internal audit team, is intended to inform the committee where dates are slipping and ensure that you do have the opportunity to scrutinise and have that oversight of areas where risks perhaps are not being addressed in as timely a way as was initially hoped. And so I would say that I feel that is something which is made very explicit to members, and there is the opportunity then to look into Annex B and the reporting in front of you and ask questions of officers if you're not comfortable with the level of delay. We do ask that officers provide updates which give a sense of the reasons for the delay and not just the fact that it's slipped back. In terms of the increase in outstanding actions over 12 months overdue, I don't think I have a single explanation for that. It would simply be a case of looking at what those actions are and the explanations that have been given. They are quite widespread across different directorates and across different audits. So it's not the case that there's perhaps a single area or a single audit where we see a significant proportion of actions that have become overdue and not been addressed. It's probably more the case that these are simply actions that in different areas officers have struggled to implement.
Thank you, Chair. I mean, I appreciate the answer, but then why should the committee accept an improved total when most of the entrenched backlog has worsened?
Well, I think we should take the good news where we can get it. But part of this, it has to be said, is in our hands, and we have done this in the past. If we are dissatisfied with what we see in terms of progress, we have it in our power. We're not the service committee. We're not responsible for digging into what's happening. But if we're not happy on the basis of the information which is given to us by internal audit, we have the power within within the Constitution to refer the matter back to the service committee with the requirement that they consider it at their next meeting. So we do have some power ourselves on this, but Mairead may have an answer to give to that question about the longer term items remaining.
I think I would just reflect your comments, Chair, and say that if there are actions that the committee has a particular concern over, then you are well within your rights to request that those are looked into by the relevant service committee.
And I'd always request advance notice if you or any other member of the committee wish to do this, but I welcome our utilising the power that we've got looking at internal audit reports to be able to refer matters back to the service committees if we believe that something looks wrong or needs to be looked at more carefully by the service committee itself. It's part of our function. Any other questions or comments? Graham.
I know you apologised, Mairead, but I found the track changes extremely helpful. It's useful for us to see what has changed or altered in particular when, as Ricky described, when target dates of actions have been delayed further. And I wouldn't apologise for that at all. And I do actually wonder whether or not it would be helpful for us to get amended versions of the document using track changes in the future. But that's up to the chair, really.
I think we would all find it very interesting in all council documents if we could see the track changes and see what had happened to get to where we are. I'm sure that the point has been heard by Mairead and by other officers. I'm not sure whether they would agree with it, but having said that, it is part of the information that is important for us to have as a committee to know how things have developed, how they've got to where they are now. And so I'd ask that officers not necessarily produce the track changes, but do bear in mind that we are interested to understand the development of the reports that we get before us. Peter.
I was going to make exactly the same point in less eloquent terms, so I entirely support that. Very helpful to know the way things are developing and to highlight those areas which are changing.
Thank you. Any other questions or comments? Just a couple from me about the whistleblowing caseloads. I was just struck by the it's always, we've got such small numbers here that of course you can't really tell much statistically, but I did notice that safeguarding had gone up from 1 in the whole of last year to 5 in the reports in the year to date. And I just wondered if they were connected to each other, if there is an issue, if it is just better reporting. Do you have any comment to make about why we see this jump in safeguarding cases reported?
Thank you, Councillor Bowden. I think that is actually the table at table 9. That only shows open cases from last year. So that would simply show cases that had not been closed as at the 31st of March. So there would have been a number more safeguarding cases last year that are not reflected in that table. I would say I haven't noticed a particular uptick in that area year on year, but that is something that we will bring to you in the annual whistleblowing report, where we do analyse kind of thematically across different years.
That's absolutely excellent. I understand now exactly. Thank you very much indeed. Any other comments or questions from any members? Oh, Mohammed, sorry. Mohammed.
Just had a question on the SEND audit around the 4 million saving initiative. It's more of a read across question, really. Is there any concerns that there's other initiatives that we have around this that maybe don't have similar governance and controls around achieving milestones or timely kind of raising or escalating issues around savings?
Right.
Thank you. It's a really good question. I would say that thematically speaking, we've seen a substantial improvement in project management across the board when we're looking at these kind of savings type projects and programs. Following on from the council introducing its project management framework a couple of years ago, it's still an area for improvement, and it's still an area that we do keep a certain level of audit coverage of. We will be auditing, I think, capital projects and programs as well later on in this year. So there may be some findings in relation to that. But I would say in general, and this was reflected in my audit opinion for the previous financial year, I think we have seen a strengthening in control around project management rather than a reduction overall.
Thank you very much. Mohammed?
Thank you. That's all.
Thank you. Any other comments or questions from members? Right. Well, we are being asked to note and comment on the internal audit progress report, which we have indeed done. So no vote is required. Thank you very much indeed, members, and thank you, Mairead. And now we move on to the highlight of this meeting, which is agenda item 10, the assurance report from the office of the Chief Executive. I wonder if Chief Executive Stephen Moore would be kind enough to introduce this item.
It would be my pleasure, Chair, and you've stolen my opening words. I was going to say this is clearly the highlight, and you've saved the best till last. Obviously, other than the agenda plan and training plan, of course. As members of the committee will be aware, we now require each of the council's directorates, and that now includes the services I'm directly responsible for, to bring forward an annual assurance report for the committee to review, to scrutinise and consider. As you'll note in setting out the report for members today, the Office of the Chief Executive was only formed on the 1st of January this year, so it hasn't had the same opportunity as the other directorates to move through the full range of controls and assurance and embed those entirely as yet. Some of that was inherited from the former Strategy and Partnerships Directorate, and some of that is still work in progress. As you can see in section 3, particularly within the report, we set out some of the services that are contained within the Office of the Chief Executive, and then importantly in section 4 give you some sense of the overall control environment that is either being embedded or has been embedded since January of this year. Section 5 sets out the current outstanding and overdue audit actions. I am pleased to say there is progress being made on a number of those, and personally expect the health and safety related action that's referenced to be closed shortly, having earlier this week seen 1 quarter's reporting as a result of the new health and safety system that's been implemented. And then the other one that I expect by way of audit actions to be closed is the reporting to this committee later in the year on the council's performance management framework, which will address another one of those points. Unlike other parts of the council, because this isn't formally a directorate, there are individual service risk registers maintained by the 2 service directors and the assistant chief executive, and they will be brought forward to the Strategy, Resources and Performance Committee twice yearly, as we do with other parts of the council. Chair, I am happy to try and take any comments or questions, but as you will probably note, we've tried to rapidly move to embed the governance structures and approvals mechanisms that you would expect to see in other parts of the council. So thank you.
Thank you very much indeed. I will open this to members. Any comments or questions that members have got? It's our one opportunity. Oh, Peter.
Thank you, Chair. Yes, as you say, our one opportunity, and I can't resist. There is reference at 5.1 in the report to possible concerns about information governance, one of which these concerns is high rated and an audit action is listed as being overdue. I wonder if I could tempt the Chief Executive to tell us a little bit more about that and whether that is a matter which we should be concerned about.
Chief Executive.
Thank you, Chair, and thank you to the Vice Chair. You will see in Appendix 1 to the report that the details of the specific audit actions are set out. So the first relating to electronic records management, the first three, in fact, relating to electronic records management are those that all constitute the information governance related matters. They sit within the legal and governance sector service under the direction of the monitoring officer. Those are areas that we are trying to move forward with some pace because they appear to have been allowed to drift for some time. I would also note that because we currently still operate a shared information governance service with a neighbouring council, we perhaps haven't had the management attention on this that we should have had. This also relates to potential policy changes and indeed what had been the intention to implement a system to enable us to record and capture this type of information, which we are now not going to be investing in, as you would expect me to say, because of course the council will not be in existence beyond 2028. That investment in a system will therefore have to be a matter for a future authority, or indeed may already exist in one of the other authorities as part of LGR, and we would adopt at that point. But in terms of the overall approach to information governance, actually the council's approach to data protection, freedom of information, regulation of Investigatory Powers Act and other associated matters is relatively robust, receives external assurance, but these three actions remain open and overdue, which is clearly unacceptable. Thank you.
Thank you, Peter. Right. Members? Graham.
Thank you, Chair. Stephen, can I ask about KPIs and whether or not your directorate, Chief Executive Department, whatever it is going to include KPIs, particularly thinking about HR matters and culture matters, which I think are your responsibility. Thank you.
Chair, through you, thank you to Councillor Wilson for the comment. Pleased to say that that already happens at the last meeting of the Strategy, Resources and Performance Committee. As part of the Council's overall balanced scorecard reporting, you receive not only the overall Council performance, you receive the specific metrics held by Michael's Directorate for Finance and Performance and the Office of the Chief Executive once a quarter, so they already are reported. The strategic key performance indicators for all parts of the council are undergoing a review, which is mentioned in the report, and of course the outcomes of that will flow through to this committee in the autumn of this year. But I'm pleased to say that those metrics are already being reported upon and scrutinised by the relevant parent committee. Thank you.
Graham?
I think that's excellent, and my apologies because I should have looked at those when I didn't turn up to, or I wasn't able to join Strategy, Resources and Performance. I just wonder whether or not the KPIs bit should be included in this. I don't know whether it is for other directorates, and certainly looking forward when they're undergoing review, whether or not they will come back to this committee. Is that a responsibility of this committee to look holistically at the way KPIs are produced, or is that something for Strategy, Resources and Performance?
Chief Executive.
Chair, thank you again to Councillor Wilson. The ownership for the Council's corporate performance framework is actually held by the Strategy, Resources and Performance Committee. That is the one that determines changes to the overall reporting of key performance indicators. But as mentioned, we will be coming back to this committee later in the year as part of the audit findings in respect of the performance management framework, which will allow you to scrutinise the decisions taken by Strategy, Resources and Performance aligned to the review of the KPIs that is currently underway. The other element relating to the performance management framework, which is referenced in the assurance report, is the government's own intention to introduce a local outcomes framework. We were expecting that to have been launched a couple of weeks ago at the Local Government Association conference by the then Secretary of State. That has been delayed, and I would imagine that the government will want to revisit the contents of that national framework that would apply to council reporting over the autumn. We'll have to look at how that then aligns with what we're already reporting as a council, because it may require additional changes, or indeed may require additional work that we currently haven't built into the service. So I think an area we can continue to explore and look at, Chair. Thank you.
Thank you. Thank you very much indeed. Members, any other questions? Right, one that I will raise with the Chief Executive is that we normally expect to see improvement within the organisation. We're always trying to strive to correct things which are wrong and to get things done in a better way. But sometimes circumstances are such that we have to manage decline. And my fear is that we're in or will be in a managed decline position so far as our HR function is concerned, with both retention and recruitment as we get closer to vesting day, and as unfortunately we're in now a greater period of uncertainty than we expected to be. To what degree do you obtain and retain assurance that we are doing as well as we can in the circumstances?
Chair, you'll be pleased to hear that through the corporate leadership team, the monthly operational scorecard of the council, not the one that comes to members, which is the more strategic version, allows us to look at the overall organisational health of the council. That includes, at the moment, turnover. Actually, we're, as part of the KPI review Councillor Wilson referenced earlier, we're in the process of changing that to a retention indicator, because we can actually see that the council's overall retention rate has gone up, not down. We're something around 96% retention at present, I think, from memory. But that is clearly an important indicator for us to be able to track on a monthly basis, and we will continue to do that. In terms of recruitment at this stage, interestingly enough, again, we are not seeing any particularly new or more challenging issues with recruitment. In fact, if I can reference progress against the council's currently approved people strategy, we have moved from 30% agency social workers and children's services in 2022 to less than 10% now, and that continues to demonstrate significant improvements in recruitment and retention, and was actually reflected as part of Ofsted's recent focused visit on children in care, saying that our children's social work workforce stability has significantly improved over the course of the last few years. That's leading to better outcomes for children, and certainly the workforce feedback to our regulators was also indicating that they are happy and enjoy working in the council, and that's been referenced formally in the inspector's written feedback to us as an authority. Clearly, we will have to continue to monitor those things going forward. I think your point about managed decline is something I would be keen to say, and we will resist as much as we can, but I'm very conscious that not all of that will be entirely in our control in terms of the council's workforce. So I guess, Chair, in answer to your question, finally, do I expect we will struggle with some recruitment and retention issues between now and 2028? Yes. Will we be able to fill all of those or address all of those gaps? No. Will that be shared as a problem across all of Cambridgeshire and Peterborough? Yes. Thank you.
Thank you. Any further questions or comments? Well, we will move to the recommendation, and the recommendation is that we consider the assurance provided over the adequacy of the Council's control environment and compliance with corporate governance controls, and we have so considered, so no vote is required. Thank you very much indeed, Chief Executive, and may I also thank the Chief Executive for the fact that he does attend these meetings of the Audit and Accounts Committee. It doesn't actually come with the post of Chief Executive that you have to attend, and there are quite a number of local authorities around the country where the Chief Executive does not normally attend the meetings of the Audit and Accounts Committee, and I think it gives us a great deal of comfort and confidence that the Chief Executive does attend every single one of these meetings if he possibly can. So thank you very much indeed, Chief Executive. Agenda item 11 is the agenda plan, the committee agenda plan. Would Democratic Services please advise of any updates to the published report?
There are no changes, Chair.
Any questions or comments from anyone? The committee is asked to note the agenda plan. No vote is required on that. Agenda item 12 is the training plan. Member services, are there any amendments to this? Members, are there any comments or questions? No? Oh, sorry, Graham.
We were just having a chat beforehand, the meeting, about the thingy site, and I'm afraid I don't know anything about it and probably should know more about it than I do. So at some stage, could Democratic Services send another reminder to all members how we get onto the thingy site and what we need to do? Thank you.
Chief Executive.
Just to be helpful to Councillor Wilson and for the benefit of those people who may still be watching after the highlight of this meeting, it's actually Thinky, and that's the County Council's learning management system, which hosts all of our digital and online learning. And I think that includes the relevant aspects of the member development hub, which Democratic Services will happily recirculate. Thank you.
Thank you very much. So the training plan then is included for noting. No votes required on that. That concludes today's business. Thank you very much indeed, members. We are a little bit ahead of schedule for once, which is very good news. This meeting is scheduled to carry on until 5 o'clock. So the committee will next meet on the 26th of November, when I'll similarly try to make sure that we finish before the advertised finish time of 5 o'clock. I declare the meeting closed. Thank you very much indeed for your attendance.